Ever wondered what's all the buzz about cryptocurrencies? You're not alone. From the high-rise towers of Wall Street to the bustling bazaars of Mumbai, everyone's talking about this digital gold rush. Cryptocurrencies, once a niche interest for tech enthusiasts, have now exploded onto the global stage, becoming a phenomenon that's as intriguing as it is perplexing. Imagine money that isn't controlled by any government or bank, but instead operates on a decentralized network. Think of a currency that's not just a piece of paper or a chunk of metal, but a line of code. Picture a financial system that's not confined by national borders, one that's as global as the internet itself. This is the world of cryptocurrencies, and yet there's so much more to this digital enigma than meets the eye. What if we told you there are 10 fascinating facts about cryptocurrencies that you probably didn't know? Now let's dive into these 10 fascinating facts about cryptocurrencies. First, cryptocurrencies operate on decentralized networks, free from control by any central authority like a government or bank. This decentralization can reduce the risk of undue interference or manipulation. Secondly, many cryptocurrencies have a capped supply. Take Bitcoin, for instance, with its total supply limited to 21 million coins. And the scarcity of these coins can potentially drive up their value over time, given the increase in demand. Thirdly, cryptocurrencies are built on an innovative technology known as blockchain. This technology is a distributed and secure ledger that ensures transparency, immutability, and security of transactions. Fourthly, cryptocurrencies are globally accessible, providing financial inclusion to individuals without access to traditional banking systems. This global reach makes them a universal currency. Our fifth fact revolves around security. Cryptocurrencies use advanced cryptographic techniques to secure transactions, making them resistant to fraud and hacking. However, it's important to remember that the security of the underlying technology depends on the specific cryptocurrency. At number 6, we have low transaction costs. Cryptocurrency transactions generally have lower fees compared to traditional financial systems, especially for cross-border transactions. Seventh, the cryptocurrency space is constantly evolving with ongoing developments and innovations. This evolution can lead to new use cases and advancements in technology. Eighth, including cryptocurrencies in an investment portfolio can provide diversification. Since they may not always move in sync with traditional financial markets, they can offer a hedge against market volatility. Ninth, cryptocurrencies have experienced significant price volatility, and some investors have seen substantial returns over relatively short periods. However, high returns come with high risks, so tread carefully. Finally, at 10, we have the early adoption potential. Cryptocurrencies are still relatively young compared to traditional assets, and some investors see potential for significant growth as adoption increases and the technology matures. Impressive, isn't it? But there's more to these facts than meets the eye. Now that we've covered the 10 facts, let's take a moment to summarize the key points. Cryptocurrencies, these digital assets, operate on decentralized networks, free from central authority control, reducing the risk of interference or manipulation. Many have a capped supply, potentially driving up their value as demand increases. They're built on blockchain technology, a secure and transparent ledger system, and offer global accessibility, broadening financial inclusion. Cryptographic techniques secure transactions, making them resistant to fraud. But remember, each cryptocurrency's security varies. Typically, transaction costs are lower compared to traditional finance, especially for cross-border dealings. The crypto space is ever-evolving, teeming with innovations, offering new use cases and technological advancements. Including cryptocurrencies in your portfolio may diversify your investments and possibly yield high returns due to their volatility. Lastly, with cryptocurrencies still being in their infancy, there's a potential for significant growth as adoption increases and technology matures. But remember, with great potential comes great risk. Before we wrap up, a word of caution is in order. With the glitter and glamour of high returns and potential growth, it's easy to forget that cryptocurrencies come with their set of risks. The market is famously volatile, and prices can swing dramatically, sometimes within the span of a day. Not all that glitters is gold, and while the allure of cryptocurrencies can be strong, it's critical to remember that these digital assets are not regulated by any central authority. This lack of regulation can lead to market manipulation with the potential for severe financial loss. It's also worth noting that while blockchain technology provides a level of security, the security of individual cryptocurrencies can vary. Fraud and hacking are real risks, and the onus is on the individual investor to secure their investments. The bottom line? Do your due diligence. Consult with financial professionals. Understand the risks before diving in. Invest wisely, and remember, only invest what you can afford to lose.